talking about how to avoid breakout trading mistakes that newbie traders do. They'll basically go in for anything, and what they do is end up making losses. So here we are looking at the daily time frame. I'm talking about swing trading here. If you look at this stock, we are looking at Rashtriya Chemical Fertilizers. We are on the daily time frame, and if you look at this candle is humongous. It's given you a 20% price rise. And if you look at this candle, it's uh, it's quite huge. And the high is equal to the close. The open is not equal to the low, but the candle is pretty good. So what a newbie trader will do will he will see that this is good. He may not. He will obviously not have this 4 hour and the 4 hour resistance and the daily line resistance that I've drawn. He will just look at this candle and he'll probably go long at the high of this candle. His stop loss will be somewhere below the low of this candle or below the low of the EMA. And what will happen is he will get taken out here. If you see here, because the price has gone, price has increased by 20%, there's profit taking, and prices come back to the mean. This is called mean reversion. And his stop loss somewhere here has been taken out, and then price proceeds again in this direction, that is upward. Let's look at shipping corporation. Shipping corporation, you have this nice candle here that you see on screen. We have a 19.99% against circuit, obviously, where the open is equal to low and the high is equal to close, and volume is also 7 times 7x plus. And so it's a very interesting candle, and newbie traders will think that, wow, there is no resistance and price is at an all-time high, and this is looking good, and they will take a entry at the high, above the high of this candle. Stop loss will be somewhere below the low of this candle here. And what happens is that when the price moves so much with such a huge candle, such a huge movement, there is profit taking, and there are traders who are ready to short. And if you see here, prices formed a shooting star and prices come down, and your stop loss of the trader who has kept it here has gone out, and he would keep it here. He will not keep it here, obviously, right? You're not going to keep it here at 50% below. You want to keep it at the low of the candle or below the EMA 9. So he's taken out, and because he's gone in for such a huge candle, so the breakout trading mistake that I wanted to avoid is not going just because you see a candle and the candle is a bullish marabuzu and you go for it. That doesn't make sense. You have to take into account the entire picture. Whether the instrument is in upswing, whether it's in consolidation, whether the moving averages are rising, whether there is a resistance or above your entry point. There's so many factors. I can go on and on and on, but I don't want to make this video long. You guys might doze off. So let me show you some trades which I've taken. And if you see here, this is ICICI Lombard. I've taken a long entry on the 26th of July above the high of this candle. Again, this is a breakout of consolidation. And the volume is also 1.5x. And there are other factors like rising moving averages, but it's a breakout of consolidation. And if you see here, this candle is just 2.66%. It's not 20%. It's not too far away from moving averages. It's breakout of consolidation. Taken an entry at the long, and the stop loss is below the low of the candle and below EMA 9. I've even written it here so that it helps you understand the rationale behind the entry, the stop loss, and the entry criteria. Let's look at another trade that I've taken. Again, here's a trade where price has retraced for a bit and broken out of the daily resistance here. The yellow line, see the daily line, that's daily resistance. And if you see, it's 4.25% one. That was our signal candle. And if you see here, again the volume is almost 2.5x plus. And if you look at the open and the low and the high and the close, you'll get a good idea as to why I've gone in for this trade. It's a breakout of consolidation, the moving average is rising up, breakout of a daily consolidation. So I took a long here and I took my stop loss is below the low of the daily candle, the EMA 9. So I'm in the trade. And if you look here at one more trade that I took, Arvind Smart, again, this is a inverse head and shoulder. Again, breakout of consolidation, breakout of the resistance at the daily level. A nice candle with 9.32%. And if you see here, if you look at the open, low, high, and the close, you'll understand why I've taken this trade. And it's just not a trade on the basis of candle, but a variety of factors which I mentioned earlier. Again, signal candle volume is at least 4x plus, and rising. All the moving EMAs are rising. It's a chart pattern breaking out of resistance, so it's a pretty good. Lot of confluence, lot of factors in confluence to allow us to increase our probability of a winning trade. And this is my SL, which is below the low of this support. I could have taken it here as well, but then if you see the spike here, it has taken. There is SL hunting here, so I decided to go with a small stop loss, and that helps me keep my position size high. But again, it's below this, and with a 9% candle, there's no point taking 10% SL, right? No point taking 10% SL because I want 1:2 at the minimum, right? Now, 1:1 will also become kinda, it's going to take long, if ever. Now, let's look at Tata Motors. Tata Motors also, if you see here, this is the inverse head and shoulders are broken out of the daily consolidation, this daily resistance, if you will, taken a trade of the high of the daily and a stop loss below the resistance and also below the EM. I'm still in the trade, and if you see this, I'm in profit, not exactly by these percentages, but close. Can you see all the trades that I've taken? It's just a matter of chance that I'm in the positive. Just because I have a confluence of factors at my back does not guarantee that I am going to be profitable in all my trades. If somebody tells you that, he's lying or he has never traded. You will not be profitable all the time, but that doesn't matter any which ways. All we need is a good winning percentage, a good risk to reward ratio. Our uh, our average losses should be less than our average gains. Our max profit should be greater than our max loss, and we are good to go. So, with all these factors, keeping it in mind, we've seen these four trades all profitable. Let's go with TTK Prestige. Again, there is consolidation here. Price is all-time high. If you see this candle has got a good volume above 1.5x or something like that, 1.7x, whatever, the daily volume. We've taken an entry here on the 24th of July. The stop loss is below the swing low consolidation, below the EMA 9. And I'm still in the trade. So this is how you are supposed to take breakout trading. You are not supposed to take out breaking trading blindly on the basis of a candle or blindly just because the candle is there and the EMA 9 is rising. You have to have as many factors as you can in confluence, and it will help you increase your profitability. So I hope you learned something new. If you haven't subscribed to my YouTube channel, please do so. Please hit the bell icon for getting notified of new videos. If you have any questions regarding this or any topic that you want me to make a video on, please do that. I wish you all the best in trading. I hope you had a good learning, and I'll see you in the next. Thank you for watching.